Hello and welcome to the Now Educated podcast. I just want to start off this episode by giving a big shout out to our man Russell. It was so great seeing you over the conference, and thank you for the feedback and just the reaction to the different episodes you've been able to catch. And we're definitely going to be doing something in the property space or real estate space on how you can use your property as an asset to generate income for you and even access financing to grow your business. Thank you for that hookup and just that nudge over there. It's coming soon. But what I want to spend today doing is going back on a previous episode where we started looking at the Victoria Falls Stock Exchange. And if you remember, or if you've listened to it or watched the episode, you remember I was pretty jacked up. I was excited about, joining and having my money come alongside the Victoria Falls Stock Exchange and start owning companies there. And one of the sweet points over and above the absence of capital gains tax when I sell, lower withholding tax on my dividends, there was the aspect of cost, like the cost of transacting. And that's very important. One of the key investment principles, if you want to grow your wealth, is you must be very sensitive to how much you pay in fees. Because the less you pay in fees, the more of your money can go towards the actual investment and the growth and the more growth you get to enjoy. So with that excitement, I started my usual process. And usually my usual process is I then go in, I'm excited, and then I want to find out how much is it going to cost me to be an investor on the Victoria Falls Stock Exchange. If I wanted to buy shares in companies, what are the costs? So they had published them and we had spoken about it, looked at it briefly. But today I just want to look at it more intently and share with you what I discovered, and hopefully this can help all of us make better decisions. All right. So I'm pairing up the Zimbabwe Stock Exchange with the Victoria Falls Stock Exchange. You're trying to see, really, is it cheaper to be on the Victoria Falls Stock Exchange, or are we missing something? Remember, I asked the question, what is in it for locals? Really, what is in it for us? Now, you look at it here. The commissions are a lot lower on the Victoria Falls Stock Exchange. That's a great thing. Less cost. Sorry for the stockbrokers there. The VAT, same percentage, because it's a lower broker commission. You're going to get lower fees there on your Victoria Falls. The CSD levies, lower as well. Stamp duty, exactly the same. ZSC levies, the ZSC or VFX levies, the ZSC is cheaper than the VFX. All right, so ZSC wins one there. The SEC levies, once again, the Victoria Falls Stock Exchange looks cheaper. The investor protection levy, the Victoria Falls Stock Exchange looks cheaper. So far, it seems like the Victoria Falls Stock Exchange, cost-wise, is whipping the ZSC's butt. And when we get to the grand total, you find that for you to participate on this market, you're going to pay 1.18% just to buy an interest in the company. So whatever money you're putting in, you're going to lose about 1.1887% to costs, right? And those costs, I like to believe that all these parties believe they are necessary to maintain the system and allow for the regulation. People can't work for free. So on the face of it, it seems like the ZSC is losing the battle, and it's definitely a smart cost play to go into the Victoria Falls Stock Exchange until, and I discovered this the hard way. Now on the Zimbabwe Stock Exchange, there is no need for any custodial services. You don't need a custodian to be part of the transaction when you are buying shares or part ownership in companies. Interestingly, on the Victoria Falls Stock Exchange, they have added custodial services. So what I did is I wanted to find out how much it's going to cost, because it's not stated anywhere. And the about 4 or 5 that I gave a call to got responses from 3. And I wanted to figure out how much is it a free service? That's why it's not covered, or is there a cost attached to it? Oh man, there's a cost attached to it. And what I began to discover was, if you across the board, you're looking at they work with a 0.1% custodial fee per transaction or per each deal that you do. Now, that sounds low. And if it was truly 0.1%, then it would still mean the Victoria Falls Stock Exchange is cheaper. But they added this little term where they're saying it's 0.1% and a minimum of $5. Now, to some of us, you're saying, Terry, it's just $5. Yeah, that's a lot of money. And I'm going to show you how it's a lot of money. And I'm going to use 3 examples, right? So I've been fortunate to teach a couple of people to do some lessons and coaching over the last 2 years. And it's really been about helping people appreciate principles around financial literacy and investing. And like I said, it's absolutely important for you to keep an eye on the costs. And over that time, I've also began to realize that when people are starting out, they're a bit cautious. They won't put a lot of money into a market. And especially if it's Zimbabwe, people really want time to think it over. And I found people usually invest in multiples as such. $50, that's the average. $100 if they're feeling a bit more confident. And then they may step it up to 150. And then if they're happy with what's happening in the market, or if they begin to understand what's going on in terms of investing in certain markets or the stock markets, they begin to put down amounts that are likely to help them hit their goals. Now, with that being said, I wanted to understand that for my average who starts off at $50, what's that going to translate to? Because it's remember these costs are percentages, so $5 may seem like a little money, but if you're investing $50, $5 is actually 10% of your investment amount. We together? So because there's a custodial fee charged when you go into the Victoria Falls Stock Exchange, if you're putting down $50 a month to buy shares, that means you're incurring an additional 10% of your in fees. So you have a 10% fee. So in total, you're incurring 11.187. So that means just to buy, right? You're going to lose 11% of your money off the top because these are fees that are paid before, and that means you're only going to probably be able to invest 89% of your money. The rest of it goes towards fees. Okay? And that's material because when you look at investment markets, if they get double digits or in real terms after inflation, if you get a 10% return, that's a pretty good year. And if we use that as a benchmark, I'm going to show you what that translates to in monetary terms and how this is such a terrible thing. So let's move to the next tier, which is the $100 a month investor. So that cuts it by half, so it becomes 5%. Still, that means you're going to lose 6.187% out of every dollar, right? So you're losing 6 cents out of every dollar that you invest, right? May not sound like much until you see the big numbers. So if we go up to 150, what does that give us? That's going to give us 3%. So you're going to be losing 4.5% of the amount of money you want to invest each time you go at this. So let me show you why this matters. Now, I'm going to do this table and then probably going to come back and do an example. Now, if we lived in an ideal world, so let's do 50, we'll do $50, and then you're just going to have to trust me that I calculated the rest of the numbers okay. And if you don't trust me, that's a great opportunity for you to learn the numbers yourself. So let's look at a real return after inflation of 10% a year, hypothetically. Really and plausible, to be honest with you. And if you were to invest over a 20-year period, and you made sure that you invested every single month, so put down your $50 every single month, in a world where there are no costs and every dollar you put towards an investment actually goes towards the investment, you would end up in 20 years with 37,968. I'll round it up to 37,968. You see it? And the amount of money you would have put down or contributed over that 20-year period would have been the $50 every month, 600 times 20, which comes up to 12,000. So that's a 3 times multiplication on your money, the power of compounding. So long term is your friend, right? So remember, time is your friend when it comes to investing because compounding allows your money to do more than you could have been able to do by just working for it. Great. Now let's look at the real world because we're not in an ideal world where there are no costs. So I'm going to bring us back here. Remember on this, and I want to compare the Zimbabwe Stock Exchange and the Victoria Falls Stock Exchange. Now we know that the Zimbabwe Stock Exchange is going to cost you 1.6884% in transaction fees. So when I say so that means return wise, each time I invest my dollar, I am going to lose 1.6884% of that return to fees, to costs. So effectively, my money grows net of fees at a rate of 8.31%. So that means if we come down here, same parameters, the amount of money I will have at the end of 20 years is 30,000. So I'm losing about 7,000, okay, over 7,000 in fees, but I'm still pretty decent. I'm just two and a half times, getting two and a half times the money I put in. Now, if I were to go to the Victoria Falls Stock Exchange, remember, at an investment of 50 a month, that means my custodial fees represent 10%. So that means my costs, the costs to me come up to 11.187%. So that's the cost of me investing. If you recall, our investment return is 10%. So that means if you're putting down, if you're on the Victoria Falls Stock Exchange now and your investment is $50 a month or less than $50, you are actually losing money each time you invest. Every year you're likely to lose money unless the stock market returns are higher than 10% return. But let's look at what the parameters we're using now. So that means every year your money falls in value by 1.19%. So that means my $12,000 investment becomes 10,686, right? So let's take some pause there, right? So I'm losing money on the Victoria Falls Stock Exchange if I'm investing every single month $50 because the costs are too high. They're higher than the income or the investment return I can get. And if you look at it, if we compare it from a place where there are no costs that I'm paying, that means that I am losing over 27,000 to costs. 27,000 is being split between all those players, all the statutory costs, which truth be told, if we didn't have the custodial fee, that would not be anything. It wouldn't be that material. You'd actually be making more money than on the ZSC and getting some of that money that was going to cost back into your pocket. So I'm not going to call out and say the custodians are greedy. Maybe it's a cost system. Maybe it's the system that we're building. Maybe it's the regulator that needs to look out and say, look, how much are we charging the custodians in fees to participate on this market and probably relook at it? Because truth be told, if we go down and say, if I put $100 down, at no cost, I'm making 75,000. On the ZSC, I'm making 62,000. On the Victoria Falls Stock Exchange, I'm making 35,000. So that means I'm making $25,000 more staying on the Zimbabwe Stock Exchange than anywhere else, right? If we go to 150, I'm making 113,000 if I have no cost. That world doesn't exist. So more realistically, if I'm on the Zimbabwe Stock Exchange, my investment is growing to about 91,000 as opposed to 43,000. So I'm losing over 37,000 between the ZSC and the Victoria Falls Stock Exchange. As you can see, the costs are making it not beneficial. You are losing so much money to primarily the biggest cost, your custodial fees. Now, at which point does the 5% minimum get us to a point, sorry, not 5%, the $5 minimum get to a point where the Victoria Falls Stock Exchange actually becomes cheaper than the Zimbabwe Stock Exchange. So what I did is I did the numbers knowing me. So if we come here and you start investing $998 every month, your costs will come down to 0.5% for the custodian. And that's going to bring in a total purchase cost or total cost of purchase to 1.688%. So that's the turning point where the Victoria Falls Stock Exchange actually meets its promise of being a cheaper stock exchange when you take into account all the costs. Oh, yeah, by the way, you cannot buy shares on the Victoria Falls Stock Exchange unless you have a custodial account. And therefore, you are forced to use the services of a custodian. So that's why I'm adding these costs because they're unavoidable. So they become material because they're unavoidable. So if we go and say, if we go to the 998 at no cost, you make about, just three quarters of a million. So 757. And the ZSC's after cost is returning to you 611,000, round about 611,135. And the Victoria Falls Stock Exchange is $30 greater. And you'll have invested 239,000. The power of compounding is there. And here you're beginning to see as the costs come down, that means more money is coming to you. So the power of compounding, a wonderful miracle, the tyranny of high costs is what you see on the Victoria Falls Stock Exchange. It is a pure example. So when the costs start matching up, you're seeing that you're losing about 19.4% of whatever you're putting down to costs. And these are inevitable costs if you're on the ZSC. But on the Victoria Falls Stock Exchange, this can range between 50% of the costs going down if you at that level, if you're at the 150 level, and right up to 70% going towards the payment of costs. So any of your investment return actually ends up going to the service provider. Whew. Right. That was a lot. I hope I didn't rush it too much and you actually got to understand something. It's a bit longer than I was hoping it would be. But all I want us to understand is right now, on the face of it, it really does feel like the Victoria Falls Stock Exchange is targeting high net worth individuals. Maybe that's why there's so many incentives to foreigners, that they appreciate and probably see individual retail investors being able to raise like $1,000 a month in investment. But to the local, to the average person, to the individual that wants to get started, that doesn't earn that much, but wants to start building something into the future, this market, the Victoria Falls Stock Exchange, is really cutting that group of people out. And I don't know if that's the intention of the regulator, that you just want this to be for the rich. I hope not, because it would be so nice if it could be accessible to each and every person. So that's me. Relook at the cost. And until then, I'm going to stick to the ZSC for a while. My name is Timmons, and I hope that you're now educated. And if you're in our community, you know that when you learn, it's always right to help other people learn. So when we know better, we help other people know better. Collectively, we end up doing better, and everything starts to get better. I'm out.